Let's get more on those numbers now. We've got Faheema Adia at Momentum joining us this evening, rather. Faheema, thank you very much for your time this evening. Let's start with those overall market moves that we saw on the local bourse today. Top 40 was down, industrials down, financials in the red as well, resources also quite a big laggard on the day's trading. Your thoughts on today's movements and really what would have informed the trading pattern today?
Good evening, Rofhiwa. Yes, a pretty rough day in the markets today. Like you said, we're seeing a lot of red across the globe with a lot of volatility during the day. JSE was down almost 1.4%. So this seems to be driven by just general negative global sentiment. We've got a number of central banks globally having raised interest rates recently to bring down very high levels of inflation. And like you said, the SA Reserve Bank most recently today hiked rates by 75 basis points. We also had those concerning remarks coming in from Russian President Putin about his plans to escalate the war in Ukraine, which caused concerns around oil and gas supply, which put some pressure on the oil pricing as well. If we have a look at the price of gold in particular, it's trading at quite low levels in comparison to the past, to all of these interest rate hikes that have been coming through. So the hikes basically means that investors can now find more favorable yields in other assets like bonds, given that gold does not yield any interest, resulting in some pressure on that gold price. So yes, overall, a pretty tough day today in the markets.
No, absolutely. And you touched on the interest rate conversation. We saw our Reserve Bank hiking by 75 basis points. In the US, we saw the Federal Reserve acting in the same manner. That also really put a lot of pressure on European and Asian markets and the pre-market open in the United States. And I mean, I suppose this is going to be the story of the day until the central banks are able to curb inflation.
Yes, Rofhiwa. So we saw yesterday the US Fed announced that 75 basis point hike, putting the Fed fund rate between 3 to 3.25%. And quite a hawkish tone came through as well, saying that rates would go even higher next year until it reaches around 4.6%. Today, we had the Bank of England also hiking rates by 50 basis points amid very high levels of inflation in the UK, and actually indicated that the UK may already be in a recession. And then, of course, today in South Africa, the Reserve Bank hiked interest rates by that 75 basis points, putting the repo rate to 6.25%. So that's largely in line with what the market was expecting. The Monetary Policy Committee also said they're expecting GDP growth of 1.9% for 2022. So that's down from the initial 2% that they had forecast in July. And the bank also said they expect inflation to come in at 6.5% at the end of 22, and then hopefully to come down to 5.3% at the end of 2023. So hopefully there will be some improvements there in the next year.
Finally, some company news, Faheema. City Lodge releasing their results. Some really positive outlook there in terms of being able to grow revenue as much as it did. Occupancy is up by over 50%. I think it was 56%. Your thoughts on the set of numbers?
Yeah, so the market responded very well to City Lodge's results. The stock was up almost 7% today. Reported an improved performance and occupancy levels, like you said, for the 2022 year, showing that the worst of COVID seems to be behind the company now. So revenue increased by about 117%, over R1 billion, while the headline loss per share improved to a loss of 9 cents, which is a big improvement from that loss of 91 cents in the previous year. I think what we like about the results is this new strategy that they laid out, which includes an eat-in offer. They've introduced dynamic pricing and a focus now on leisure travels, which seems pretty promising. And we feel this should help City Lodge remain competitive in a post-COVID world with less business travel. Yeah, so bear in mind that despite the improvements, though, the occupancy levels have not yet returned to pre-COVID levels. Though we do feel that the business is now in a better position towards achieving that in the near future. So, yeah, definitely a good set of results from there.
Absolutely, and I suppose it will get better as we see business tourism pick up in different parts of the world. Thank you very much, Faheema Adia, joining us from Momentum this evening to unpack the markets day that was. And that's all your business.